Hey guys, welcome back to the channel. Let's do something a little different today, and we're going to review a couple of videos that are out there at the moment and see if we can work out what actually is going on. The videos in question are one from Aussie Wealth Creation and the other from Daniel Pronk. Both excellent videos, and the topic up for review is why did Warren Buffett sell his airline stocks? Both of them have done fantastic videos. They have reviewed two different sections of why they think Warren Buffett has sold his airline stocks after saying that he was going to not sell anything back in March, and we're only the 6th of April right now. So I'll mention those two briefly, and then what I want to do is jump into a way that we can profit from this in terms of looking at a chart and learning how to read a chart. Super basic stuff, but highly profitable if done well and if you can hold the patience. So strap yourself in, let's get into some technical analysis right after getting into the fundamentals. So building these two blocks for your trading plan and seeing if we can profit from this in the long term. So let me start with Aussie Wealth Creation's video, and there are several articles through there, so I won't go through all the exact details of the buyback and all the figures that have come out from his selling, how many stocks, all that sort of stuff, because all of the details are there. But essentially, there's a few models of why we think Buffett has sold his stocks. The first being he thinks that the situation has changed dramatically from 3 or 4 weeks ago when Buffett initially said that he wasn't going to sell any airline stocks. And as we can see in the last few days, Buffett has sold a reasonable position of his overall holdings of Delta and SouthWest Airlines. So both of these airlines are down considerably, 50-60% from their highs. So it's not something that we expect from Warren Buffett to do, is to sell stocks when others are fearful. We know him for his saying of be fearful when others are greedy and greedy when others are fearful. And right now it seems like everyone's being fearful. So why would he be selling them? And so what AWC, Aussie Wealth Creation, has looked at here is gone through to the balance sheet, seeing how much cash is on the books, seeing how much they have available to them, to see what they have to repay to people who have purchased airline tickets in the past who need to get refunds, and then balance this all out to see what their ratios are. And they're not showing too good, but it's not the end of the world. They are burning through around $60 million per day, and that only leaves them about 47 days left with how much cash they have available. So they have a huge bank account, at least enough to get them through 47 days at their burn rate currently. And it doesn't look like that they're going to get bailouts either. That's another theory. It's potentially they're not going to get the bailouts from the government, because what the airlines have been doing is aggressively buying back their stock. So with the profits that they've been making, they have just been pushing up their stock price for the investors, buying back their stock, taking stock off the market, supply and demand, price goes up. That keeps the investors happy, doesn't really do too much for the business. In fact, it does nothing at all. Pushes up the price. They're not actually creating any value in the business to create more money further down the track. It's just there to push up the price. And President Trump doesn't like this as an investment strategy and is looking to not give any bailout money to the airlines who are doing this. And now another theory that AWC had, and I really like this last one, it made a lot of sense to me, is that Warren Buffett is trying to get under the insider ownership. So if an investor owns more than 10% of a company, they're deemed an insider. So if he can reduce his position in these stocks that he owns more than 10% of now, then he's not seen as an insider anymore. And that helps out his investing because he doesn't have to report what he is doing in the markets to the SEC, and all the public can see exactly what he's doing. So to keep it under 10% but above 5%, so he's still seen as an owner of the company, looks like where Buffett wants to position himself in these airlines. Unfortunately, when he was buying the stock, he had overbought, and he says that in a couple of videos which are on these guys' channel, CNBC interview as well, and he said that he looked like he had overbought the stock, and that led to him owning more than 10%. So every time he does a move in the market, he has to report it, the public sees what's going on, and then the public copies that, so it just pushes all of his investments out of whack. And if it was me, that's definitely something that I would want to do. I don't want to let other people know what my moves are before I've had time for them to happen. So they're the theories from AWC's video. I really like those ones, especially the last one. Now moving on to Daniel Pronk's video, this one went absolutely crazy. From the time that I viewed it, it's over 200,000 views in the last 2 days. So the guy's doing something right. He's really delving deeply into the numbers of these stocks and providing a lot of value to the viewers, to us. He's really able to read the balance sheets quite well and explain it in such a simple way that you and I, the viewers, can understand it very quickly and learn how to read these reports from the companies. So just like AWC, Daniel has gone through the balance sheets and explained to us what they have on the books, what they have shown over the last several years, what they've been doing with their money with these buybacks, and why the US government does not like these buyback schemes. And that may be something that Warren Buffett has considered, saying that potentially the government's not going to give them a bailout, and that could put them at risk of going into bankruptcy as they don't have enough money to continue them through this hard time. Seeing as, for example, Delta Airlines only has about 47 days left at their burn rate of 60 million to get them through. So that was one theory from Daniel, thinking that potentially the times have changed quite dramatically over the last few weeks. We can all see the COVID charts that the virus has shot up dramatically in the US. At least their numbers are being reported a lot better than some other places around the world. And that could be a leading factor as to why Warren has reduced some of his position in these airlines. And the value he's holding in the airlines compared to his total portfolio value is extremely small. On AWC's channel, he said it was around 0.16%. So selling about 18% of one of the airlines, of all of the stocks that he owns, doesn't equate very much of his overall portfolio. So to us, small investors, it might look like a hell of a lot that he's selling, but overall the loss that he's taken is extremely small, comparatively speaking. Daniel goes on to mention the Buffett effect as well, just like AWC. It's good to note here that Daniel's video came out 2 days ago and AWC's video came out about 9 hours ago. So I thought it'd just be interesting to mention that as well, given the amount of research time that's been able to be done by both of these guys. Both have been fantastic, very in-depth. So overall, they're all the theories in regards to why Warren Buffett has sold his stock. I'm really leaning a lot more towards AWC's theory that Warren Buffett wants to be under 10% and above 5% of his holdings within a company. It just makes so much sense thinking about what type of investor Warren Buffett is. Obviously a value investor, but he knows the rules of the game. He's been in it for so long, and I really believe that he wouldn't want more people to see what he is doing, because it just takes away from the effects of his trading. He has said in other trades he's made that he wants to hold off letting the public know, because it just puts way too much effect on the market, and that can move a market before any move's actually taken place. So with that said, we're taking the position that Warren is going to be holding these stocks long term, and he's not looking to get out of these stocks gradually until the stock goes to zero or potentially gets bankrupt. So we're taking the position that Warren is going to be holding these stocks and looking at ways to get into the market now and profit from these huge reductions in price. So let's jump over to the chart and I will show you what I'm looking at in terms of my trading plan for these stocks. Now, I'll let you know I do not own any of these stocks. However, I really love this as an educational example of where to look for buy and sell signals. So let's take a look at the chart and dive into where these great buy and sell points are. Now, we can see here that the chart goes back to 2007, probably IPO'd at that time. And really at this point, we are just checking the pricing. I don't need to know anything else about the company. It may have IPO'd at this point, and maybe that's all the data that is in TradingView for this stock. I don't know. What we want to see here at this point to look for the levels where we could expect some support and resistance. So going back to the chart, we can see here that there were some highs back in 2010, and these prices were around $14 here. So if we look to the right, you can see that that's where the price is, and pretty much could sit on 15 bucks. Where we have seen support so far, so we fast forward all the way to March 2020, the low came in at $19. So where does $19 sit in the chart? It basically sits at some old highs from when these records began back in 2007. So we can see here, that's a reasonably good spot for a market to hold support at old tops. That is something that we know, that markets tend to use old highs as support, and if they break through that support, that's a really weak sign. So we don't want to see it break through the levels of $19. What we can also see are previous highs at $11 and $12 back in 2012. If it came back and broke these levels here, potentially even back here at $6.40, I would think something is seriously wrong, and this company is going far below $6. Not like there's very far to go below $6, but it looks like it's over for the time being for that company, if not indefinitely. Our buy orders, I would be sitting them somewhere at this 19 level, and we see ourselves at 22 now. So for me, if I was doing a dollar cost averaging, I would be setting it monthly and looking to buy at these levels at $19 or $20. If I didn't want to be greedy, then sure, around $21, $22 is a very good support. I wouldn't be going all in at this point, only because we don't know if this is going to keep going further, and it could hold up at $15. And if it did get to $15, I would really love that over $20. But if it went from 20 all the way up to these lows here in 2016 and 2015, these levels are at 36. So that's the potential it has from this point. I would like to get in now around 21, 22, and then also set my buy orders for these levels at around 15. And if I didn't want to be greedy as such, get in before other people, maybe go up around $15.50 to $16 on these levels. So from this point, we could see the market turn and go up. And as I just mentioned before, we could see it test the old lows back in 2016 and 2015 of around $35 or $36, because there is not much price data here between these levels where we see ourselves now at $20, $22 and all the way up to $35, $36. So it is easier for the market to move this distance. Now that's something that I could get into in further videos, but for now I'll just mention the areas we're looking for support and resistance. After that point, the next numbers we would be looking for are around $44 to $45 as the next line of resistance. I'll just mention briefly as well, if this does go down from here, the first level is around $14 or $15, next level $11 or $12, because you can see there was a high in 2012 and also another high in 2008, and below that it starts to get very shaky and we're looking at $7, and then these lows back here are around $5.50 to $6. So that's why I don't buy all in at once, because there are potential better prices coming up. On the flip side, there's also the possibility of it going all the way up to $36 quite quickly, but I'm willing to take that risk, and maybe we'll see a few better prices on the way down and then see it start to crawl back up over the years to come. So finally, let's look at the sell prices at the other end. Maybe we're going to take some profit. Maybe we're not going to hold out these stocks forever like Warren Buffett does. And the other end is, like we just looked at, $35, $36. That's if we want to take a quick profit. Then we've got the other end at $45, and then potentially all the way up to its old highs at around $60 to $62. 63 is also an old high. If it breaks through that, it's looking very strong. There is clear sky all the way up to wherever it needs to go. And that is a pretty big potential if this market turns around. For it to break old highs is a very strong signal. No one can forecast that, but what we can forecast is if it does break the highs, it is looking very strong and it's a great stock to get into. So imagine getting it now at $22 and it comes up to these old lows at around 46. You've essentially doubled your money on this stock here. That's a possibility of doubling your money. From 22 to 66, it's got to break through the high, so it's got a lot of resistance to triple your money as well, so keep that in mind. And apart from that, the other end is potential to lose 30, 40%, maybe even 50% if it breaks through those old highs at $15. So overall, there is a lot of risk and reward within this stock, but it's something that I think has the potential to increase in value over time. So these are great levels to be getting in at if this was my portfolio. So that's where I'm looking at the buy and the sells. I hope you found this video valuable. There's a lot of information out there, especially the fundamental information about stocks. But I wanted to add my touch to it in terms of how to get into the market. When is a good time to buy? What price is a good price? How much should I buy? That's really going to come down to what price the stock is and how much money you've got to put into a particular stock and how much you have for your overall portfolio. So keep that in mind when you're investing, and don't risk more than you can afford to lose. Guys, if you found this video useful, please like the video down below. It helps out the channel a lot and obviously gets it out there on the YouTube algorithm to plenty more people. Join me on Facebook, search my name, link is in the description, and I'll see you over there for more finance related content. Stick around on the channel. Many of you haven't subscribed, so be sure to hit the subscribe and the bell notification icon. I'll see you guys very soon at the next video. There's 2 a week. Can't wait to see you again. And remember, until next time, have more fun to get more done.